So hi everyone and welcome to this technical masterclass. We had to wait a couple of minutes just so everyone could join. So very briefly, this is a weekly masterclass where we do a market outlook is accessible to everyone free of charge of course. So we invite everyone to participate and gain some knowledge about our trading strategies and the weekly bias we have for the forex markets. So before getting into the charts, let's examine some of the events scheduled for this week. See what kind of news reports we're going to see this week. So starting with Monday, we have bank holidays. No, Tuesday actually. Monday there is nothing. It's going to be a chill market. On Tuesday, we're going to have bank holidays for the JPY. Later on, we have the CPI on the CAD. So CPI measures the change in the price of goods and services purchased by consumers in Canada. A higher than expected reading can be bullish for the CAD, and in the contrary, a lower than expected reading can be bearish as it suggests weaker consumer demand. The previous one was 0.5%, and the same figure is forecasted for the publication on this particular day, meaning there is likely not going to be much impact and volatility on the CAD. And then we move on Wednesday. So we have the CPI on the GBP. Same thing here. A higher than expected reading can be bullish for the GBP as it may signal increased inflationary pressures, while a lower than expected reading can be bearish. For this release, we expect a lower figure because inflation as it stands at 10.1% is too high. So the Bank of England is taking measures to stabilize it. However, a lower consumer price index will initially devalue the GBP relative to other currencies. Later on the day, there is going to be lots of news releases on the USD, starting with FOMC economic projections, FOMC statements, federal funds rate decision. So the FOMC is going to release its economic projections and policy statements, followed by a press conference with Fed Chair Jerome Powell. Any indications of potential changes in interest rates or tapering of assets purchases can affect the USD. So this is one of the most impactful moments of the month for the USD, as these events are scheduled only 8 times a year and are usually the cause of a high volatility. Thursday, CHF. The Swiss National Bank will announce its latest decision on interest rates. A higher than expected interest rate can be bullish for the CHF, and so the contrary. The forecast predicts 1.5% compared to the 1% figure released previously on December 15th for the previous quarter. Keeping in mind that the official forecast has been correct to predict the exact number of this metric 4 out of the 5 times over the past 15 months, we expect the CHF to be slightly bullish as the policy rate shifts up. Later on, official bank rates on the GBP. So the Bank of England will announce its latest decision on interest rates. Any changes in interest rates or comments on the economic outlook can definitely affect the GBP. Unemployment claims on the dollar. It measures the number of individuals who filed for unemployment insurance for the first time in the past week in the USA. So a higher than expected reading can be bearish for the dollar as it suggests a weaker labor market and potential negative impacts on consumer spending. We do not expect this particular event to cause major disruptions on the markets as it is released weekly. However, it does hold important implications into the potential future employment numbers, which are one of the most vital indicators of the economy. So we have the euro as well. So basically, the European Central Bank will hold a press conference following its monetary policy decision and indication of potential changes in interest rates or economic outlook will likely affect the euro. On Friday, moving on, we have the euro PMI, German flash PMI, GBP PMI, USD PMI. So this purchasing managers index PMI measure the activity level of purchasing managers in the services of different economies. So a reading above 50 indicates expansion, while a reading below 50 indicates contraction. Higher than expected readings can be bullish for the currency, while lower than expected readings can be bearish. So investors often compare PMIs across different countries to gain insights into the relative strength of different economies. So now we are going to jump on the charts. I know that there are lots of things to analyze this week, meaning that it can take a couple of hours in order to analyze everything properly in front of you, because there's a point to analyze in front of you. But today I choose to, let's say, analyze properly the US dollar and all the other major pairs. Meanwhile, for the ones that don't know that, we already do every night analyze the Forex market for our premium members, as it is a part of our premium services, where we go through every currency, indices, Forex, cryptocurrencies, etc., etc. But of course, it takes a couple of hours in order to do that. So yeah, we got 1 hour for free today. So let's use that in the best way we can. So now looking on the dollar, on the higher time frames, on the long-term run, I'm bearish on it personally. But it's gonna take, let's say, a couple of days. So the question is, what is going to happen in the near future? Meaning starting from next week, the week after probably, knowing that in a couple of days we will have the end of this first quarter of 2023 and the beginning of a new one, which could potentially be a quarter which retraces lower, or a quarter which decides to, let's say, trades sideways. As our predictions are that in 6 months the dollar is going to be more weak than it is. So we jump on the daily time frame. We see price right here rejected to trade above this level, which for some is known as support and resistance level, supply and demand, it doesn't matter. For us is known as a level which price had a high potential to take it out, meaning to trade above, and then trade off to the downside from this level. However, we saw that the NFP came out as it came out. Everyone was surprised why price is trading to the downside when the news is positive, etc., etc. So we had to wait for the CPI. The CPI was negative. We saw price going to the upside. So yeah, there is times in the market when fundamentals on the short term run means nothing, because the only impact they might have on the intraday timeframes, it's bringing volatility into the markets. It doesn't mean that, let's say, the NFP is positive and you will see the dollar pushing all the way to the upside. No, you see the NFP pushing to the downside. You see the CPI negative, you expect to trade to the downside because you might think that, okay, the markets broke these lows right here, so basically it's going to continue to the downside. And no, it does go on the contrary side. So that's why sometime for the intraday trader, the focus should be more on the technicals, meanwhile knowing the long-term perspective. Meanwhile knowing that at some points in the market, there are levels which are, let's say, connected or biased, pushed by the longer term projections. And there are other areas of the markets where price is basically driven based on the intraday price action, intraday orders. And this is where you can get stuck. Same thing here. For the well-educated trader, for the trader that applies our strategy, etc., We knew that the DXY had a potential here to hold off this level and continue to the upside. However, it broke down. Yes, we know that right here, money is waiting to be collected. This doesn't change our bias, but let's say it changes the projection, meaning that if we know that, okay, in a couple of days, we want to see price exactly at this point, it might happen that price fails to do that. And we know that, okay, it won't come now. It might come in 2 weeks, 3 weeks, let's say 1 month. So it's just the change of the long-term projection, meaning that right after price broke this low, we knew that, okay, now we're entering into a bearish mood. But that doesn't mean that we have immediately to sell, because we know that price somehow has to retrace higher and then trade to the downside, right? So on the 4-hour perspective, we saw price trading in a tighter mood right here. On the 1-hour time frame, we could identify a gap in price which has to be filled at some point. Meanwhile, knowing that this huge candle, which represents the NFP, as well has a gap on it, which has to be filled. So let's say that you are an investor, you are trying to manipulate the other investors, you are a hedge fund manager, you own lots of money, you basically want to manipulate the other traders in the markets, which don't have the same amount of money as you. You have the power to control the market, right? So what would you do in a situation when the market is basically bullish and everyone knows that? You plan to sell. Of course that you would continue first the order flow. Let's buy. Let's go to a point where everyone sees that yes, it's bullish through lots of, let's say, bullish momentum, etc., etc. And then you start to sell into the markets in order to rebalance these orders. While you do that, you make sure to buy one more time before breaking this structure. And then you sell. So far, you have been let's say you managed to close every position at break even, the ones that were supposed to be a loss. But these orders right here, once the market trades to the downside, are still there. So basically you are in drawdown and you have to close these orders. Meanwhile, you know that you're bearish, right? So what you want to do is you want to buy again, send the price to the same levels so you can mitigate your losses before selling off again. So yes, this was a level where we had anticipated into longs. Now referring to the educated traders, we wanted to see a takeout of this liquidity on the downside, meanwhile knowing that price has to fill this area and a potential fill of these other orders right here. So once everything was filled, we saw price gapping down on Thursday. So potentially could form the high of the day at this same gap, filling in continuation to the downside as on the intraday lower time frames like the 50 minutes. We saw price collecting liquidity down here. So this was filled. We had a breakout structure, liquidity being collected, and this was the correlation I had personally with the Euro USD, where I went long and even posted that on my Instagram accounts, otherwise on our Discord channel for the premium members. So it took out the liquidity, continued all the way to the downside. And same thing happened basically on Friday. We had a continuation market to the downside. So now the question is, what could happen in the near term? I have two potential ideas. The first one is that I expect the Monday to create the low of the day somewhere at these levels, which on the 1-hour time frame, we see some imbalances or price inefficiencies. So I want to see price trading down here, filling these orders before aiming for this liquidity that was left, or let's say before manipulating this resistance level that was created on Friday. The second idea is that we might have some pre-orders in the markets, meaning that the market could gap to the upside. And that is why I am referring to this level as a break of structure, meaning that let's say that price would break above this level. At the first retracement, this would be where I would, let's say, expect the London to create the low of the day before trading to the upside. So yes, I am favoring the dollar to be appreciated on Monday, starting from the week. And then starting from this level, a continuation to the downside. On a daily time frame, everything looks perfectly, let's say, healthy, ready to trade to the downside. So the only thing that I want to realize is, could we potentially see price, let's say, trading all the way to the downside and never coming back to fill these orders? Or could we see a market where Monday, Tuesday trades to the upside, and Wednesday, Thursday, Friday, we see price somewhere here, declining lower and continuing to the downside with a long-term projection of price trading inside of these levels? If you have any questions so far, let me know. Otherwise, we move on. Jumping on the GBP USD. For example, this was a trade that's it was biased correlated with the DXY on Thursday. So now on GBP USD, we see price trading below a trend line, which for us is known, let's say, as a level where most of the time price has to manipulate it, meaning that it has to trade above it, because everyone is trying to sell at the same levels, the same as everyone would see the breakout of it and will try to be a seller, while when we look at it, we want to do the opposite actually. We want to buy while we know that they're going to sell the majority of the markets, and we want to sell up here when everyone will wait for the breakout and the retest to buy here. So basically, yes, these guys will be a target for us, a part of the liquidity, etc., etc. So when it comes to GBP USD, very simple. We see price that's on the weekly time frame. It's kind of healthy. It's more bearish than ever at the moment. So if there is going to be any small retracement to the upside before declining lower, it has to be now. And why I say that? Well, because it's the liquidity that is towards the, let's say, the market's current momentum. So if we manage to see a correlation between GBP USD, meanwhile price trading at these levels, and we can use the lower time frames, intraday confirmations, like let's say a break of structure. If we see a current low being formed here who sponsors a higher high, so we see price trading inside of this candle, the white one, we want to see a break to the downside, a small pullback, continuation below these lows. Same bias on the Euro USD, where we see that on the actual price action, we see that the markets filled in this area that you already now know as imbalance. So it could potentially, yes, start to trade to the downside immediately when the market opens. However, the 1 hour time frame is not yet suggesting that. So I have highlighted these levels as potential area where price could form the high of the week, or let's say Monday high, if it starts to trade higher immediately, before declining to the downside. The only way, because we will see later on AUD/USD and NZD/USDs, etc., the only way which could change this idea would be the gap on the DXY, meaning that the gap on the DXY could result as, let's say, emergency break right here, a small pullback, continuation to the downside. Otherwise, if the price action remains healthy, so everything continues as it is, yeah, just expecting price to mitigate there, and only then would consider to take some short positions. The same thing applies on the USD CAD, where I see the USD to be appreciated more. On the 4 hour time frame on Friday, we saw price trying to trade to the upside, reacting off these levels right here, managed to retrace in order to rebalance the markets. On the 1 hour time frame, everything looks healthy so far, let's say. However, I like the fact that price broke now this 50-minute structure right here, but I don't like the fact that on the DXY, let's say that the DXY is not really correlated with this current price action. So in moments like this, the trader is the one that takes the decision. Should I risk it or should I select some other major currency which has a better price action, etc., etc. So yeah, that's basically why I'll not be so focused on the USD CAD uh, unless I see, let's say, the markets probably declining lower, coming to this level right here before accumulating, doing something similar to as, and then continuation to the upside. And then we jump on the AUD USD. So on the AUD USD daily time frame, or we can go even a bit higher, monthly time frame. So on the monthly time frame, when looking at this price action, we understand that the market once was declining lower, etc., etc. The last quarter of 2022 was kind of, let's say, retracement mood, and then the first quarter of 2023, we saw price declining lower, filling in these orders right here. So the question is, are we bullish or are we bearish? On the weekly time frame, everything so far looks still bearish, right? But that doesn't mean that we can't go long on the intraday position, meaning that there will always be times that the market wants to retrace. However, the only thing that I don't like here is the market sentiment, meaning that on the weekly perspective, everyone can say that I think so. Probably not. But in my eyes, everyone could say that yes, we're bearish. So that would make most of the traders to go short on this price action. But knowing that the swing traders, or let's say swing orders, the traders that refer to the weekly time frame, don't concern us, we have to focus on the daily time frame. So on the daily time frame, if we see the market sentiment is not bearish, it's bullish. So yes, everyone is kind of buying at the moment, which means that from a weekly perspective, let's say that you are the same guy that controls the markets and you saw price right here creating a trend line. Everyone is buying, right? So you are the same guy that sells. You know that the market will crash. And that's why you buy, you give hope to all these other traders, to everyone who believes that yes, we're buying, etc., etc. You manipulate the markets. And what happens with these orders? You have a buy position open right here. You got to close it, right? So the next week, you buy again, you send the markets to the same levels, you mitigate your losses, and now you're ready to go to this other zone. But when you go to the daily time frame, you won't see that. You might see that yes, these orders has been filled since let's say Monday. Price traded sideways for a couple of days inside of the same price range, considering this is a high and this is a low. Meanwhile, the gap down here was not filled yet, so it's still an open gap on the 1 hour time frame down here. And then Friday had another high point, meaning that yes, we don't have, let's say, any huge reference, and I know what you would call any huge reference, an order block, same like this one here, for example. But trading is not always about order blocks. I know that if you jump on YouTube, it's funny nowadays that everyone pretends to know how to trade institutional concepts, etc., etc., because they think that they trade order block. Order block is nothing. It's just one of the 100 pieces, you know. But market order flow, market sentiments, and mixed up with experience, fundamentals, and lots of other things, it's what brings you to the perfect entry point. The perfect entry point is not a buy to sell candle or a sell to buy candle, an engulfing candle, a support or resistance, a liquidity grab. No, it's a combination of all. Meaning that right here, if I would ask each one of you, you would say that, I mean, now talking for the premium members, you would say that, yes, this is a level that I want to sell. Okay, I agree. I would do the same thing if I didn't know, for example, that price already did this. Meaning that right here, knowing the current conditions on the DXY, etc., if it is going to be correlated with, let's say, the DXY, yes, we might see a mitigation of this level. And later on, we have to see for a break of structure, a pullback continuation to the downside. Otherwise, if we see the markets breaking before this level, is the first retracement of the same high who sponsored that, meaning this one, the level that we will refer to as the entry points. Targeting first this small gap right here, and then on the long run, well, there is a lot to aim for to this level. So if no questions so far, I'll continue. Let me just delay this so I keep my charts clean. NZD/USD is the same kind of vibe right here. Let's go on the monthly time frame, see where is the market heading. So right here we're dealing with a market who's trading, let's say, at the middle points at the equilibrium of the recent range. We have a support area down here, which is going to serve as liquidity, as a zone who will be manipulated once price comes back one more time here. So if you plan to buy, regret that. And then knowing that in the middle of this point, the market could go both ways. We know that, yes, it can go both ways based on the monthly perspective. And we know that in 6 months, it will. Which means that it's not our concern now at the moment if the market is going sideways on the monthly perspective, because we are not trading swing. Meaning that when we jump on the weekly time frame, we see that the markets kind of broke this low right here. So we have a breakout structure. It has to retrace somewhere to the upside before declining lower. On the daily time frame, same thing shows up. We see the market trying to trade to the upside, but we still don't see any clean breakout structure on the daily time frame, even though we identify clean highs right here, which for us serves as liquidity. However, what I like right here is this high who traded above these previous highs right here. I can show you on the 1 hour time frame. So knowing that my bias at the moment is a very short-term bias for the dollar, I would prioritize a break of this low, a small pullback, and a continuation to these levels. This level is the Friday 10th. So basically I want to see price creating a lower point than the previous week, and there is a very small gap down here, same situation as the AUD/USD, but we have to see the break first. Otherwise, it will still continue to trade to the upside, cleaning these highs as well. And if that's going to be the case, it means that we won't have the correlation on the DXY. So basically, it's going to happen that other scenario that I told you, that the DXY, for example, trades below, goes to this level, and then comes back to this other area. So in the end of the day, yes, it's going to be the same thing for these, let's say, big traders who own all this money and can manipulate the markets, because in the end of the day, they just want to rebalance their orders. So for them, it doesn't matter. So you hear me now, guys? Yes. Yeah, perfectly. Had just some technical problems. I don't know what's happened with my headphones. So yeah, we move on. I was just explaining that if everyone thinks right here that we're bullish, we know that this is just trying to rebalance these orders. If everyone is thinking that at the first retracement, I'm going to buy because we're bullish, so I'm buying the retracement. The guys that learns to buy at the 50% on the YouTube, stop loss hit. The guys that buys at the 0.61 stop loss hit. The guys that buys at 0.671 again stop loss hit. Even if these guys now are institutional traders, they know that if they buy at an, let's say, premium or discounted price levels, the first thing they want to see is that after, let's say, price has been filling in the orders, or let's say simply retracing, it has to break the previous high before coming back to entry again. So it fails to break the previous high, it comes to entry again. Institutional traders, meaning me, you, us, who understand these concepts and this way of trading, we close at break even knowing that we have to wait for a deeper retracement. And once price comes, let's say, to the maximum levels, it can still reach a bit below, to the maximum levels of the recent price range, we know that we won't change the long-term price projection. But that's what we can change is the short-term projection in order to understand, is on their interests to buy on Monday, to have at least 1 to 3 days maximum a bullish price action before selling off again? Yes, it is. Why it is? Because we see that up here on Friday, we had price consolidating both ways, building up liquidity. Some is buying the support, some is selling the resistance, doesn't really matter. Now, once these buyers gets taken out, these sellers are still there. And if you are that guy that wants to manipulate everyone, you want to control the money, play with the markets, you don't want to have anyone else with you. You want to be the only one. You want to be the elite. You want to be the 1%, again, the 99%. But right here, unfortunately, there are traders following you. So that is why we might see some retracements to the upside before declining lower again. So if no other question, let me know if you have any question. Okay, perfect. It means that I explained the right way. So yeah, as you see, guys, in order to let's say analyze the markets, it takes more than 2-3 simple concepts. It is simple. It becomes simpler. I don't know what happened. When you, for example, apply these concepts many times, so it becomes easy for you to see things even without drawing at all. For example, I remember myself a couple of years ago, I used to draw a lot in order even to explain to the others what I am looking at, etc., etc. But later on, it becomes a habit. It becomes something that your eyes can recognize it without needing to, let's say, put a line on it because you know what that area signifies, etc., etc. And once you master these things, everything can change. And nowadays, uh, there are plenty opportunities out there online in order to make money. If before, for example, traders had no opportunity to do such things that we can do nowadays, well, now we can. We have internet with, let's say, a laptop or even an iPad. We can execute, we can analyze, we can do lots of things that traders before couldn't do. All they could do was simply read some fundamentals, watch some numbers. Okay, where are they buying? Where are we buying? Where is the money being created? Where is the liquidity? How is the order flow, etc., etc. So everything was easy, let's say easier to manipulate because numbers, right? Reports. But right here, we can see the reaction. So we can compare, let's say, the numbers with the real market movements. And then we can come into conclusions. Okay, are these numbers lying or are these moves lying? So who's basically lying? Is my, let's say, prime minister lying for the economy or is the market lying? So once I, let's say, develop myself as a trader, once I learn how the market moves, I don't care anymore what is the governor saying, what is the prime minister saying, what are the numbers saying, nothing at all. Yes, I might care on the long run when I see, let's say, reports regarding CPI, inflation, etc., but not, for example, a situation as, I don't know, COVID or whatever happens, that it happens for a reason. And at the Market Nerd, we are strong believers that learning how to trade Forex is one of the best ways to earn money because it's a long-term run. And our goal is always to assist you in accomplishing this in the most efficient manner possible, regardless of whether you are, let's say, new to trading or an experienced trader. And we do have as well an online academy which covers all the necessary stages to help you succeed in Forex trading, which includes our unique smart money concepts methodology. So if you are ready to, let's say, change your strategy or change the way you think, change the way you trade, check our course. It includes 80 more video lessons that cover a wide range of topics, including technical analysis, fundamental analysis, risk management techniques, trade management methodologies. And with this course, you'll be able to master all these, let's say, the art of trading and increase your chances of success because you will know how to plan the trade and then trade the plan. Additionally, you're going to have opportunity to test your knowledges even with crisis and have a one-to-one session with me as well, where you can ask any questions and benefit from my experience as I'm the one that's, let's say, have been writing down all these concepts and everything explaining there. So let's say that you didn't understand anything the way I explained, we can do that one-to-one, not any problem at all. And another thing that we are doing at the moment is that we are offering to all our current member a free challenge of 50k. So basically, it's a challenge that costs around 400 euro for a leverage 1 to 20 and 500 euro for a leverage of 1 to 200. And we're giving this for free to all the current members because these guys really deserves it. We have lots of guys that are hardworking guys, works a lot, etc., etc. So that's why I'm pretty sure that most of you will succeed and will get funded. So I want to see you this week on fire. And of course, attend all the technical masterclasses that we will be doing in order for you to get as many insights as possible. And then, of course, take the trades the way you plan them. So if no other question, that was kind of all for today. And we will see each other hopefully in 2 weeks. So I got a final question. What do you think of Bitcoin? Weekly is almost broke structure. It almost broke the structure, but the week candle will close on Sunday night. Better to wait until morning. What do you think? I can do a quick outlook on the Bitcoin. So Bitcoin, as you see, we have, let's say, a candle, a monthly candle, which started bearish and then managed to trade bullish, etc., etc. On the weekly time frame, we can see that the week where price kind of explode, it was this week. And here you can see the importance of support and resistance. Why you shouldn't buy a support and why you shouldn't sell a resistance. So basically, yes, when price was trading right here, everyone went on the media. Every journalist started to write that yes, Bitcoin is trading near the 6 months high, the previous 6 month high. So lots of sellers into the market. Why? Well, you see this huge candle. These buyers have to mitigate their losses in order to buy again. So once price trades back to that level, benefits from the current condition on the DXY with the latest, let's say, news releases, and on the next couple of days, all the way bullish. So it still has a potential to continue to the upside in order to fill some more orders. And while I am, let's say, prioritizing or let's say favoring the dollar in this week, I expect the cryptocurrencies to retrace at least for a couple of days and then a continuation to the upside. As you see, from starting from this point where everything started to shift to the upside, there is still lots of areas which has to be balanced. So yeah, these huge candles, the white ones, we want to see price coming back one more time before trading higher. And when it comes to these levels, the matter that we're going to work is going to be that first we have to, let's say, analyze the current market's sentiment, the current markets from a fundamental side, and the current situation with the dollar. Why? Because let's say in these kind of cases where the market is trying to fill some imbalances which below have other imbalances, and in between them is a key level serving as a structure, it's a 50-50 situation. The market can either fill these orders and form, let's say, a perfect accumulation scenario before taking off. Otherwise, it comes to these levels, it gives, let's say, a short-term impact to the upside, and then trades all the way here, accumulates again, and only then continues to the upside. So this is a matter that we're going to have to see after a couple of days, so not something to be concerned now. But at the moment, yes, I still see some pressure to the upside before declining lower, meaning that today, tomorrow, it can still push to the upside. And starting from Monday, we have to see. So guys, thank you for your time. I hope that this call helped you in some ways. Let me know in our feedback channel in case you didn't like anything or in case you liked anything. So yeah, take care, trade safe, and see you soon.